I'd love to get your thoughts on the market action, specifically yesterday and today, and get your sense of how much rebalancing is at work here. And then we can talk maybe a little bit in a moment about how we start getting some metrics to look at overall equity valuations.
Yeah, I mean, I think the activity we've seen, particularly over the last week, has largely been a lot of index rebalancing. Obviously, it feels a little bit like a bear market rally. We've seen those. They tend to be fast and furious. And certainly for the 3 days last week of Tuesday, Wednesday, and Thursday, it kind of felt that way. But I would definitely say a lot of this is index rebalancing. We estimated somewhere around 150 billion of equities that needed to be purchased by people who are tactical asset allocators and pension funds as they come out of fixed income instruments and into equities, just based on where the numbers shake out. So I think you're seeing a little bit of that here as we come into the end of the quarter.
And is it your sense that valuation models are starting to get enough input to where they are somewhat reliable on where the market is right now?
Yeah, so I think if you're a fundamental buyer or seller of equities, like you need the first 2 weeks of this information was just, people were selling just to get liquid. But now people, it's slowed down a little bit in terms of the pace of information. And so people can start to think about how to value equities, how to build their discounted cash flow models, how to think about, put 2020 in a box, or maybe the first half of 2020 in a box, and then ultimately figure out how your 5-year cash flows are going to look beginning in 2021. And once people start to do fundamental work, that's when they can begin to decide whether or not the stocks that they own are cheap or expensive relative to where they're trading. What I've said to people is you got to be nimble. So markets will definitely overreact to the upside and the downside. But if you have a pretty good idea of what you think is likely to happen as you build your economic models for companies, the 5-year, it won't matter much in a 5-year model. And so that's where I see people starting to do a lot of fundamental work.
Yeah, part of what scared a lot of investors, Jeff, over the quarter was what we were starting to see in the bond market. And on that front, it does appear that there's good news, that the Fed has been mostly successful in terms of reopening the junk bond market after the longest dry spell since 2008. We're seeing those blockages in some of the credit and funding markets start to clear up. Just curious how you guys at Cowen are seeing the reaction from the Fed moves and how long you expect that to last and whether you think we're in the clear.
So, I mean, it's hard to call an all clear here because I think so much of this depends on how the virus plays out over time. But we're definitely seeing better functioning in the credit markets since the Fed actions. I would say with the exception maybe of commercial mortgage-backed securities, those don't seem to be trading as well. But that may be a fundamental reason. But in terms of other corporate credit, much better. We had a lot of investment grade deals that came to market last week. And I think the first high yield market, first high yield deals in the market today. It'll be wider than I think what people thought it might be, but at least it's getting done. And that's a really healthy sign as corporate balance sheets. People will become less worried about corporate balance sheets going forward. So, again, it was really important for the Fed to maintain liquidity and maintain some sort of normal market function outside of equities, because that takes the pressure off of investors who simply need to sell equities in order to generate liquidity.
Hey, Jeff, it's David Faber. Speaking of how things are functioning, you're joining us from your home, I assume. That's your home. And I would guess many of your colleagues who sit on trading desks and people across Wall Street who sit on trading desks are working from home. Give me your take on how you think it's all working at this point. It's something the likes of which I assume we never thought we'd actually see.
Yeah, I mean, we build these business continuity programs mostly around single events. We didn't think we'd be doing this on a continuous basis, and that was been a big change. But from our standpoint at Cowen, it's working just fine, actually. We have been doing record volumes in our trading business for most of the month, and everybody's working from home. Literally, everybody's working from home. We might have less than a dozen people globally in the office, and that's only because people want to be in the office. It's been a remarkable experience at testing and implementing these plans. And so, I think it'll be a while before, at least in New York, people get back to the office, but it won't change the way that we're doing business at Cowen. We've been doing org meetings for IPOs and follow-ons. I think we'll see a bunch of folks probably try to hit the market here, probably first in biotech and maybe tools and diagnostics over the next few days if markets continue to hold together here. And we're doing all of that activity remotely.
Right.
And I think Zoom has been a huge help here, as obviously everybody knows.
Jeff, as the CEO of an organization, do you think that once we're through this, though, that people will work differently? Will you view it differently in terms of when people want to work from home?
Yeah, I do think we'll view it differently. I mean, listen, we're social animals, and so I do think that there is a desire part of people to congregate, and there's a creativity that happens when we are all together in person. But I certainly think that, like, bankers doing red eyes to get to meetings, to string together 4 or 5 different cities, I think people will rethink that, whether or not that's actually valuable. And I think the change there, frankly, has been not so much on the part of our organization, but our clients' willingness to engage with us over distance media. I mean, I think the big fear is, if you did a conference call or a video call with a client, did that mean you cared less about them? And now people are like, wow, we should just do these video conferences because it's a lot more efficient. I personally am probably saving 2 hours a day on my commute, and I'm working much more efficiently. So I think that you will definitely see changes in behavior. It's too early to say what those will be, but everybody seems very comfortable to be working remotely, at least for the near term.